Good afternoon. Um, Welcome to today's class. So, in the previous class, we talked about, well, obviously, it's still on chart patterns, and in our last class, we discussed a notable chart pattern, which is our triple bottom and triple top. So, before that, we looked further into the double bottom and the double top, and all these categorized chart patterns are capable of changing the trend of the market. The trend of the market, in the sense that in a situation or in a market scenario where we are in an uptrend, our patterns like double top and triple top are capable of changing that trend of the market if they meet the rules of the formation of the chart patterns. And what are the rules of the formation of the chart patterns? Firstly, we want to see a trend, a pattern, a breakout, and also a trend. So, with that, we can consider having a chart pattern we can utilize on. So now, let's quickly do a recap of what we discussed in the last class before we move to another example of a chart pattern. So in the previous class, we talked about the triple top and the triple bottom. So with the triple top, what do we notice, or what do we want to see? Obviously, in the triple top, we want to see a trending market. A trending market that gives us a trend, and we notice the pattern. What is the pattern we are trying to derive? The pattern that makes us confirm this particular pattern, chart pattern, is a triple top. Now, we've seen a trend, a pattern has formed, and we are waiting for a breakout. The breakout occurs, we are entering at the pullback of the breakout or the retest of the breakout. So when that occurs, our entry will be around this region, and we are now having a trend. So if you apply the same concept of our rules to formation of a chart pattern, now let's go back to it. We have a trend, we've seen a pattern, a breakout, and also a trend. Same goes to the triple bottom. Now let's look at the triple bottom. With the triple bottom formation, we've seen a trend. We notice a trend. On what trend are we noticing? A downtrend market. So that tells you, with a triple top, we want to be looking at an uptrend market. An uptrend market that particular pattern is capable of changing that trend, reversing that trend into a bullish trend to a bearish format. Likewise, the triple bottom. The triple bottom, we want to be seeing a bearish market. A bearish market that is ready to be changed from the bearish market into a bullish market. And how do we confirm this? We want to see a trend, a pattern, and we want to wait for a breakout, and we are entering at the retest of that breakout. So once that retest happens, we've made our entry here, and we are now in line with the new trend. So if you recap on what happened, we notice a trend, a pattern, a breakout to create a new trend. So if they say this chart pattern is capable of reversing the trend, this is what they mean. So you can see why we classify the triple top and triple bottom under the reversal patterns. You can see They are under the reversal pattern because they are capable of changing that uptrend market we are seeing into a bearish market. They are capable of changing that downtrend market we are seeing into an uptrend market. We understand now. So now let's quickly look at a quick example before we move on to another chart pattern examples. So this is looking like one of the pictorial example we can make use of. So let's use our parts. Okay, this is looking more of like a double bottom. You can see with a double bottom, how am I able to identify this? I identified it because I noticed the market is finding it difficult to break through a particular level. Now I've seen a double bottom which can be classified as equal lows. Now that has formed. What do we notice? A trend. We've seen a pattern. Now did we see a breakout? Obviously we saw a breakout. So you can see we've seen a breakout from that region. And do we see a pullback? Yes, we saw a deep pullback to continue the new market direction. Now let's look for okay, this is looking like a perfect example here. So let's look at this. We've seen a trend. So that trend forms. Do we notice a pattern? Let's see. Yes, we notice a pattern. And what pattern did we notice? The pattern, the pictorial example of the pattern we are seeing on our chart. We can see obviously it is a triple bottom pattern formation. You could see we notice the market is finding it hard to break through this particular level. Instead, it created triple lows. Now these triple lows, we've seen our pattern already. That pattern has formed. Now what are we going to wait for? We want to wait for the market to break the neckline of these highs. Did the neckline got broken? Yes, obviously it got broken. Market gave us a pullback and we started buying to the upside. You could see now we notice a bearish market, which is the trend. A pattern forms, which is the triple bottom. We are waiting for a breakout. Do we see the breakout? Yes, we saw the breakout. The breakout forms, and now it gave a pullback to continue the new trend. Very, very straightforward. So let's look for an example of the triple top. Okay, with the triple top here, I could see one here, 2, 3 and 4. Now did we notice a trend? Did we see a pattern? Obviously we saw a pattern whereby market is finding it hard to break through this particular region. So instead it gives us a triple top, finding it difficult to break through this particular level. And did we see a breakout? Yes, obviously we saw a breakout. Market retested and the market sold to the downside. You could see how we move from a triple top to a triple bottom. The triple top changed the formation of the market, changed the direction of the market here. Now it's sold. Market reaches a point, it finds it hard to still continue to sell to the downward, and instead we saw a triple bottom formation. So in this regard, we can say the market switched from the triple top, gave us a small sell, switched to the bottom side, and it gave us a triple bottom. So that triple bottom confirms this upward direction, this new trend of the market we are seeing. You could see. So what's the takeaway from this? The takeaway from this is we are making use, we are taking a leverage of this pattern, utilizing this to make a confirmation, to make a decision, to know where the market direction is heading. So the chart pattern will give us an earlier into what the market really wants to do. And if we are abiding to the rules, we are sticking to this rule to be able to understand the market movement, the market direction, the structure of the market, in order for us to make a decision. So you could see. So any question on this so far? Do you have a question? So we've treated various examples, and I can see we are now familiar with how a triple bottom and also a triple tops forms. And now let's look at the one for today. So our next example of one of the reversal patterns is these popular ones we must have been hearing of. So this one is called head and shoulder. You can see head and shoulder. We should just see these chart patterns as what the structure, because one thing you have to know is we derive chart patterns from the structure of the market. Now, how does an head and shoulder forms? Now, we want to derive this pattern from the structural movement of the market. How? We notice market gave us a higher high here, it gave us higher low, and it gave us a new higher high formation, which is this. So with this higher high formation, we are expecting the market to give us a higher low to continue its upward direction, but instead market came all the way and gave us an equal low. With this equal low, it gave us what? A high. So with that high, it gave us a higher low. With that high, it gave us a lower low. So in this regard, so what do we notice in this formation? Now we can call this our head and shoulder. How? Look at this first high here, this swing high. This swing high will be classified as our left shoulder. This top that is looking like a mountain top will be classified as our head. So with this right hand side will be classified as the right hand shoulder, because if you look at how human being, the look of an human being, you could see this is looking like an head, two shoulders. Obviously human have two shoulders, so the left shoulder will be here and here will be the right shoulders. So you can see how they derive this pattern from the structural movements of what the market is saying. So in this regard, even if we are not utilizing this head and shoulder, we should know that, okay, it seems the market is not giving us, if we are making use of our normal structural components, what are our normal structural components? In an uptrend, the only thing we want to be seeing is higher low, higher highs, higher lows, higher highs, higher lows. In a situation whereby we are not seeing those correspondence happening, we should notice that there seems to be a reversal. Market is giving us an hint that structural upward direction we are seeing is about to come to an end. And what does that mean? It means the buyers are failing to continue to keep pushing the market into an upward direction. So with that, we want to take it as an hint to the future movement of the market. And what's the future movement of the market? Since we are not seeing that uptrend market again, we should be anticipating market changing its direction from the from an uptrend market into a downtrend market. So now let's look at how this forms. Let's recap to what happened. Higher high, higher low, market gave us an higher high. So we are expecting market to give us an higher low to continue in its upward direction, but instead it gave us an equal lows here. So with this equal lows formation, let's go back to the rules to a formation of our chart pattern to see if we've seen what we want to see. Now, the first one being the trend. Let's highlight the trend. Did we notice a trend? Yes. What trend were we on? We are obviously on an uptrend market. The second, which is the pattern. Did we notice a pattern? Yes, obviously we did. And what pattern did we notice? We noticed an head and shoulder pattern. How? A left shoulder here, we saw an head, and we saw a right shoulder. Now we've identified a pattern. It's tallying to our formation, our rules to a formation of a chart pattern. So the third one on the list, what's the third one? A breakout. So now in this regard, where will be our breakout? Very, very simple. Our breakout would be that swing low that created that high. And where is the swing low? Here. And if you look closely, that swing low also equates to what created the equal lows, but we are not interested. The one we are interested is the recent low that created this high. So now in this regard, that will be classified as the low we will be looking the market breaks. So this will be the neckline. So that neckline will serve as our breakout point. So now we've seen a breakout. You can see it is now aligning to what we want to see when a chart pattern forms. A chart pattern is not a chart pattern until it gives you that confirmation. And what's the confirmation we are anticipating? The most important one here, which is the third rules on the list, and it's a breakout. A breakout needs to occur to let us validate this chart pattern we are seeing is really about to reverse the market we are seeing. So once that breakout forms, what do we want to wait for? We want to wait for the market to give us what? To retest that neckline or that breakout point. So once market retests that breakout point, we should be looking closely and monitoring the price actions we are seeing there. If I say price action, we want to be monitoring our candlestick pattern. What kind of patterns do we want to be seeing in that breakout point? Obviously, we want to be seeing our bearish confirmation candlestick patterns, evening stars, our bearish engulfings, our bearish aramis, our dark cloud. These are the kind of patterns, candlestick patterns we want to be seeing once the market gives us that retest or pullback. So now once market gives us that pullback, let's assume maybe we've seen an evening star. Evening star formation signifies the sellers wants to keep pushing the price down. And once that forms, now does the fourth one on the rules of formation of a pattern occurs? Obviously it occurs. So without being done, we now have a new trend. So now let's recap to what happened. We notice a trend, a pattern forms, a breakout occurs, and the fourth one being on the list is a trend. And that's what we want to see: a trend, a pattern, a breakout, a new trend. You could see. And now, before we move on to a chart, there is a tools here that is capable of letting us quickly identify or this pattern on our charts. You can see here I have asterisk mine, I favorited mine. You can see what you are seeing here is head and shoulders. Head and shoulders. Head and shoulder in the sense that we want to be seeing two shoulders and one head. And if you look at the pictorial diagram, um, the platform highlighted, you could see they also make it in form of head and shoulder. See the head, see the shoulders, the left shoulders, the head, and the right shoulders, and they put the line on that break line, on that equal lows, signifying that the for us to confirm this chart pattern valid, the neckline have to be broken. Now let's make use of these tools and see how it works. Now if I click on an icon here, you can see the first thing that came out is left shoulder. So with the left shoulder formation, it needs to be here. So if I click it, the left shoulder, we've identified the left shoulder. Now you can see what appears again, the head. Obviously the head will be higher than that of the shoulders. I've done that. Markets will create equal lows. You can see the right shoulders have signified. So we also want to identify the right shoulders. I've clicked the right shoulders there, and you can see I've identified my head and shoulder, making use of the quick tools on TradingView. You can see, does it align to the earlier pattern I drew? Obviously it's aligned. Now same thing, a trend, a pattern, a breakout. We'll be waiting for a breakout here. Markets should give us a breakout before we can make a decision. And the fourth one, we want to see a trend. You could see, very straightforward. So any question before we go on chart and look at an example on our chart? Do we have a question? Any question? Do we have a question before we go on charts? So if there's no question, let's go and look at examples on our charts. Now let's look at, so to identify head and shoulder on our chart, it will be obvious because you're mainly looking at the direction of the market. You want to see a very high that equates to a shoulders. And if you look at now, the current example on my chart is giving me that vibes. It's giving me that pictorial formation of how an head and shoulder should look. Because in trading, your eyes is your signals, whether you like it or not. It is what you see. And if you look at what TradingView normally say, like the value proposition, you look before you leap. So if you are looking, you have to look at what am I really seeing? Is what I'm seeing, is it giving me one of the examples of a chart patterns? So those are the things you have to make as a decision. So now what I'm seeing on my chart it's obvious. Even before bringing out the tools, I could visibly see that what I'm seeing on my chart is head and shoulders. How? Now this is my left shoulder here. Where is my head? This is the head here. Why am I making this an head? The head is greater, is higher than that of the left shoulder I identified. Once I click that, I've identified the head. Now with the head, I want to look to identify the right shoulder. You can see this is the right shoulder here. I identified the right shoulder. So where will now be my neckline? It is very straightforward. My neckline will be these lows. These lows will be my neckline. My neckline says that I want market to break through this neckline to validate this chart pattern for me. And did the market give us that breakout? Yes, obviously it did. It broke through the neckline. You could see market gave us a head and shoulder formation. The left shoulder is here, the right shoulder is visible too, and we also saw an head. So that's why I said earlier, it will be obvious once you spot this on your chart. It will be obvious for you to spot it on your chart, because all you need to do is just to use your intuition that, okay, what am I seeing? Your psychological approach will determine if what you are seeing is correct. Now, what I'm seeing here, I've seen a left shoulder, I saw an head, I also saw a right shoulder. With that, I've been able to identify my pattern. Now, let's look at the rules to a formation of a pattern, a chart pattern. We notice a trend. The trend of this market before the formation of this head and shoulder was on an uptrend. An uptrend, it says that we've seen a higher high, a higher low has formed, we've seen another higher high. But with the creation of the new higher high, we are expecting the market to give us a higher low for the trend continuation. But instead, what do we see? We notice market just gave us a low, a higher low, and it gave us a high. So with that high being formed, we should not notice that, oh, it seems something is wrong. Market wants to change trend. Because using your structural view, your structural approach to this market, you should know that the market is looking to change trend for a bit. And now we've been able to derive our chart patterns from there. Left shoulder has formed, the head has formed, and also the right shoulder has formed. A trend, we've seen a pattern. Did we see a breakout? Yes, we saw a breakout. And that breakout, obviously, we always want to wait for a retest of the neckline or the breakout point. Did we see that? Obviously, we saw that too. And if you look closely, what is that candlestick pattern that confirms the neckline? Obviously, it is a shooting star. Look at the risk rejection. And with a shooting star, we can see it closes greenish. It closes bullish. So the color doesn't matter in this regard, but what we are able to derive from what market did is we want to see rejection from the upside. And that rejection forms, market sold. Now, let's look at the reward ratio if we are to capitalize on this on the 4-hour chart. Our stop loss will be above those wicks, and we will have targets at least 1:4. So it's looking to be a good trade to have capitalized on. So this is how we could leverage and take advantage of chart pattern, making use, utilizing it, adding it to our trading plan or strategy. Because like I said earlier, the head and shoulder will be visible. When you see it, you can't unsee it. It is mostly obvious on the charts. Likewise, the previous chart patterns we've been discussing with triple bottoms, triple tops, double bottom, triple bottom. When you see them, you can't unsee them. It will be obvious, because what you want to be seeing in those formations is the structure of the market is looking to change. The structure of the market is looking to change, and once the structural movement of the market is changing, we should be anticipating reversals. So these patterns will just give us that head look of the future movement of the market. So now let's look for another pictorial example on our charts. can see, I said once you see it, you can't unsee it. You can see this is another one I've been able to identify, head and shoulder. Now let me bring out the tools to see if I'm right or wrong. A left shoulder, the head, the right shoulder, and the neckline. You could see, very straightforward. And where will be the neckline I'm looking at? Obviously the lowest low of this point will be the neckline, and in this regard I could see it forms. Why am I using this lowest low? If you look at closely, this was the low that created this left shoulder's high. You could see. So sometimes the market might not give you that perfect picture look you want to see on your chart, but like I always say, your intuition matters. Your psychological approach on how you intend to view the market matters. So now I'm making use of this as my neckline because it was the lowest point the market uses to create the left shoulder, and the left shoulder formation was what led to the formation of the pattern we want to see. And if we make use of the rules of our chart patterns, we've seen a trend, we notice the pattern. What's the pattern we notice? Head and shoulders. And now we are waiting for a breakout. Did we see that breakout? Obviously we saw it. That breakout forms, we waited for a retest or a pullback. That retest happened. And we entered with the formation of the bearish engulfing, putting our stop loss above those wicks. And the root targets, okay, we saw at least 1:3. So it's still a winning trade. You could see it's a winning trade. So any question on this so far? Do we have a question? So if there is no question, so I'll be giving us an assignment again. The assignments here so the assignment here is to, with the way I drew my head and shoulder, you look for like 2 pairs and make sure you are able to identify head and shoulders on any pairs of your choice. As we are making use of this on the forex market, it works on the crypto market as well. So you can decide to choose any pairs of your choice. So in the next class we'll cross check it so we can check the opposite one of it, which is the inverse head and shoulder. So if there's no question, that will be the end of today's class. So see you in the next class and have a nice day.